I'm Joanna Simpson here at Risk Minds International in London. Joining me now is Danielle Carreira, Head of Finance Sector Engagement at the Tropical Force Alliance, hosted by the World Economic Forum. Thank you very much for joining me.
Thank you, Jan.
And the World Economic Forum's Global Risk Report has had environmental risks at the top of the list for years now. Among them, biodiversity is high. How can loss of biodiversity impact financial institutions?
Thank you. So yes, according to that report, over 50% of the world's total GDP is moderately or highly dependent on nature and its services. So, for example, the Dutch Central Bank recently published a study estimating that the Dutch financial sector has a dependence on biodiversity with an exposure of over 510 billion across the globe. So just to set the context here. So by financing clients that with economic activities that depend on nature or impact nature, banks, for example, are directly or indirectly exposed to natural capital risks and nature risks. To illustrate that, I think the industries which are most dependent on biodiversity are agricultural products, apparel, luxury goods, brewers, and electric utilities. And the industries which have the most impact on nature are agriculture, fuel distribution, mining, and oil and gas. So this all creates risks, and we have what we call transition risks, and we have physical risks. Transition risks are, for example, regulations, which are being set by policymakers and regulators in order to allow a sustainable development of our economy. Interesting example that came up recently is linked to deforestation as the major driver of terrestrial biodiversity loss. The EU deforestation regulation, which pretty much states that any company will be banned of bringing any products which are linked to any type of deforestation to the EU. When we think about physical risks, if you think about economies or economic activities that depend on nature. So, for example, if we going back to the forest, because that's what I talk a lot about my job, is if you have no forest, you have no water. If there is no water, you have no agriculture. So economic sectors which are reliant on commodity productions, for example, they will be at huge risks.
And the resilience of financial institutions will be tested with climate change. Would you define what a nature-positive economy would look like and how financial institutions can adopt that ethos?
So a nature-positive economy would combine ambitious conservation targets with the transformation of modern food production and consumption patterns, pretty much. So change on how we use land and build infrastructure and how we source and consume minerals and energy. So only three socioeconomic systems are responsible for the most significant business-related pressures on biodiversity. And these are food, land, and ocean use, infrastructure and the built environment, and extractive and energy. So enlightened financial institutions, which realize that continued facilitating the current unsustainable pattern of production and consumption, can actually start engaging with their clients. They can start integrating biodiversity risks in their lending and investment decisions, and actually help identify business opportunities by financing sustainable land use, infrastructure, and energy.
And as head of finance sector engagement, what are the common challenges you're hearing about from those you speak to on a day-to-day basis, but also here at Risk Minds?
Well, the list is long, but just to name a few. I think one that call me a lot of my attention is actually lack of knowledge and awareness. There was a poll there which was keeping CROs awake at night. Climate risk was at the bottom of the list, so I was quite disheartened to listen to that. I think the lack of clarity on definitions is another big issue. Lack of data. I think again I would like to say there is data there, but if people don't start using the data that is out there, they're not gonna know what's the best data and which data to use. I think regulatory uncertainty is a big one that keeps coming. And because of all of that, I think because of the lack of knowledge and understanding, the perceived lack of exposure. We talk to some financial institutions here on the global north, and they I don't lend anything to producers, but of course they are indirectly exposed by the supply chain. And like I said, just a few, just to mention.
Thank you. And what does the journey towards a nature-positive economy look like for CROs and risk managers around the world?
So risk is where the change in climate in our nature environments, including biodiversity and ecosystems, is hitting home. So CROs and risk managers are in effect the best place to understand that. Within companies, the topic of nature is following the course of climate discussions. I think if CROs and risk managers start to factor material risks from dependence on nature and impact in biodiversity, and they start engaging with their clients and investors in these topics, they will start to do with nature what they did with climate risk, and they can steer their institutions towards a nature-positive economy.
Danielle Carreira, thank you very much for your time today.
You're very welcome. Thank you.